Very good morning, everyone. How are you all? Everyone fine? Super. Today we are going to start our lecture number 4 for CA into Advanced Accounting regular batch. Last day we were doing Accounting Standard 2 and we have almost completed it. Few points are left. We'll complete this chapter today. But before that, let us give a quick recap of whatever we have done in Accounting Standard 2. What is the meaning of inventories? Inventories are assets which are held for sale in the ordinary course of business, which are held in the process of production, which are held in the form of material or supplies to be consumed in the process of production or for rendering of services. In simple word, we can say inventory includes finished goods or stock in trade, raw material, and work in progress. What is the valuation criteria, measurement criteria? That it will be valued at cost price or NRV, whichever is lower on reporting date. What are the component of cost price? So to find out the cost of purchase of stock in trade in case of non-manufacturing organization, we'll take invoice price less trade discount or rebate plus non-refundable duties and taxes plus all the directly attributable expenses to bring the inventory in present location. We have understood that cash discount or settlement discount will not be deducted. It will be transferred to PL account once received. Then in case of finished good, for manufacturing organization, there are three components: cost of purchase, cost of conversion, other cost. Cost of purchase means cost of purchase of raw material. It is nothing but invoice price less trade discount or rebate plus non-refundable duties and taxes plus all the directly attributable expenses to bring the inventory in present location. Then we'll add cost of conversion. It will include direct labor cost and production overhead. Production overhead can be of variable or fixed overhead. Variable overhead will be allocated to each unit on the basis of actual production. However, fixed overhead will be allocated to each unit on the basis of actual or normal, whichever is higher. Then we'll add other costs. Other costs are the expenses incurred to bring the inventory in present location and in the condition for sale. Okay. Then what are not included in the cost price? That is abnormal loss, storage cost. If it is not necessary for production purpose, then administrative overhead, selling and distribution cost, and borrowing cost. Okay. Now we have also understood that if there are some normal loss, then how to calculate cost price per unit? We will take cost of purchase divided by balance unit after normal loss. Means abnormal loss will be separately calculated and will be reduced from cost price of inventory and charged to PL account as an expense. Okay, sir. Then special cost. We have done 2 points: joint product and byproduct. Joint product, for joint product, the joint cost will be allocated to each joint product in the ratio of sales value at the point of split off or on completion of production. Byproduct, what they want to say, if there are some product whose value is immaterial, then it will be considered as byproduct. Means if the value is material, then it will be considered as joint product only. So if immaterial, it will be measured at NRB, and NRB will be reduced from the cost price of main product or joint product. Got this point? Yes, sir. Then how to measure NRB? For finished goods, it will be equal to estimated selling price minus estimated selling expense. For WIP, it will be, first we need to find out NRB of finished good, that is estimated selling price of finished goods minus estimated selling expense of finished goods. From that, we deduct estimated cost to complete the finished goods. That will be given the question. For raw material, if the finished goods which are produced from that raw material are expected to be sold at profit, means if the NRB of finished good is equal to or more than the cost price of finished good, then in that case raw material will be valued at cost price. However, if the finished goods are expected to sold at loss, means NRB of finished good is less than the cost price of finished good, then in that case raw material will be valued at cost price or replacement cost, whichever is lower. Then we have done the cost formula. Cost formula will be used to determine the cost price per unit. For that purpose, if the inventories which are not ordinarily interchangeable, we use specific identification method. But for the inventories which are which can be interchanged, which can be ordinary interchangeable, which are ordinary interchangeable. In that case, if the actual cost can be determined, we use first in first out method or weighted average price method. But if the actual price cannot be determined, then we calculate approximate cost by using two techniques for valuation inventory. For non-manufacturing organization, we use retail price method or adjusted selling price method. For manufacturing, we use standard cost method. Now, adjusted selling price method, how to find out the cost price of closing stock? First, we need to find out sale price of closing stock. That is nothing but number of units of closing stock multiplied by sale price per unit. From that, we'll deduct profit margin. The difference will be cost price of closing stock. However, we have done two questions based on that. For standard costing, they will never ask any question in advanced accounting paper. Then for FIFO and weighted average price method, we have not taken any question, but I say normally a CA interlevel, they don't ask specific question of FIFO or weighted average cost price method. But to give a recap or an idea, what is FIFO, what is weighted average cost price method, I will take one example. But we have understood that LIFO is not applicable as per AS2. Okay, sir. This much we have done in the last class. Write down one example. Write down one example. Examples. Details of purchase. 1st Jan 2025. 100 units at rupees 25. Then 5 Jan 25. Again they purchase 150 units at rupees 30. Then 10 Jan 25. Again they purchase 75 units at a rate of rupees 28. Then 25 Jan 25. Again they purchase 200 units at a rate of rupees 35. Okay. Got this point? Then add on. During Jan month, 320 units are sold. Determine cost price of closing stock and cost of goods sold by using point number A, FIFO method. Point number B, weighted average price method. Okay, sir. Very simple question I have taken. I think you can only do it. But because I have taken example, I need to explain. Let us solution. First, you will use FIFO, first in first out method. Now, first in first out method means what? Whatever units purchased first will be sold first. It means you can see 320 units are sold. Means how many total units are purchased? You can see 100 plus 150 plus 75 plus 200. It is 525. It means one thing is clear, that sold total is 320. The closing stock total will be what? 205. So this 320 unit will be sold from which lot? So 100 from this lot, 150 from this lot, it become 250. You can see 320 minus 250, so 70 from this lot. Means closing stock from this lot will be nil, this lot will be nil, this lot 5, and this is entirely in closing stock. Got this point? Are you getting what I am saying? So can you say cost price of closing stock will be 5 into 28 because this is from this lot. We'll say 5 into 28 plus 200 into what? 35. This is the closing stock under FIFO method. So this will be how much? 5 into 28 is equal to 140 plus 200 into 35. 7,000. Total is what? 7140. And if you want to find out cost of goods sold, or if it is suppose raw material, so we'll find out cost of material consumed. Correct now? So if this is raw material, then we call it cost of raw material consumed. If it is stock in trade, then we call it stock of goods sold. Got this point? That depends upon the information given the question. So that will be from what? Are you getting? So 100 into 25, 100 into 25 plus then 150 into 30, 150 into 30 plus 70 into 28. Can you do it? This become 2,500. Then 150 into 30 is equal to 4,500 plus 70 into 28, that is 1960 is equal to 2,500 plus 4,500 plus 1960 is coming 8,960. Got this point? Understood. This is what FIFO method. I think you have understood. Now coming to weighted average price method. So in this what we do? First we calculate cost price per unit on average basis, but we'll apply weighted average. Weighted average means what? We'll give weight of unit purchase. So what will do? 100 into 25, 100 into 25, then 150 into 30, then 75 into 28, then 200 into 35. 200 into 35. I have not given opening stock. Suppose opening stock was given, so that will be also considered. Correct. So can this become the total cost of purchase divided by total unit purchase. So 100 plus 155 plus 75 plus 200. Can you give me the total cost of purchase? That is 16,100 divided by 525. What is the cost price per unit? That is 16,100 divided by 525. It is 30.67. So 30.67 is what? Cost price per unit. Now you can find out what is the cost price of closing stock. So how many unit left? That is 205. So we'll do 205 into 30 point. You can say 67. So 205 into 30.67 is equal to what? It is 6287. And cost of goods sold, how many units sold? So units sold is what? 320. We'll do 320 into 30.67. So you can see 320 into 30.67 is equal to 9814. However, the total should be always equal to 16,100. The total should be equal to this. So there will be some rounding of difference. Why? Because we have done here what? Rounding off. Because of that reason there will be some approximation difference. What you can do? You just add the difference amount, means 6287 plus 9814 is equal to what? It is 16,101. So 1 rupees more is there. So what you can do? Either you can make it 6 or you can make it 3. So now the total is correct. Means approximately we are getting correct answer only. Understood? Have you understood? This is what your weighted average price method. Got this fine? Have you understood? So one question I have taken only for your understanding. LIFO they will never ask in CA inter exam because LIFO is not applicable as per AS2. Okay, sir. Chalega. I think this will help you. Now coming to the next point about comparison of NRV and cost price. We have understood that cost price need to be determined, NRV need to determine, then we should compare it. But comparison should be done on what basis? So AS2 has simply said comparison will be done on item by item basis. So what do you mean by item basis? Just try to understand. When I say item by item basis comparison, correct? Now just try to understand. Suppose we have one type of inventory, rice, and we deal in rice. But in rice there may be different items based on quality, correct? Now, so rice A, B, C, and we also deal in wheat, and we have P, Q, R. Got this point? Have you understood? Yes, sir. Now we need to find out cost price. Now suppose cost price 100, 125, 120, and 175. We need to find out NRV also. Suppose NRV is 110, 90, and 150. Okay. Similarly, for wheat also we'll find out cost price NRV on item by item basis. Correct. So suppose this is 200, 225, and 275, and this is 190, 250, 250, and 300. Now the question is that how to compare. So actually there are two ways. Either we can compare on item by item basis, or we can also compare on group basis. This is group, correct? So when I say this is known as group basis, correct? And this is known as what? When we compare this is known as item by item basis. Item by item basis. Are you getting? So if you compare on item by item basis or group basis, the answer will be different. Let's check. Here the value is what? 100 lower, then 90 lower, then 150 lower. Then here it is 190 lower, 225 lower, and 275 lower. Can you give me the total? Total is coming 100 plus 90 plus 150 plus 190 plus 225 plus 275, and the answer is 1030. Correct? Understood. Now if we compare on group basis, then what will be answer? We will make total of the group. It is 100 plus 120 plus 175. That is 395. This is 395. Then 110 plus 90 plus 150. This is 350. What is the lower? 350. We write down 350. The lower of this is 350. Similarly, for wheat, it is 200 plus 225 plus 275. It is 700. And this is 190 plus 250 plus 300. This is 740. Are you getting what I am saying? So for these, it is what? 700. And the total is what? 700 plus 350 is equal to 1050. 1050 means on item by item basis your answer is what? 1030. On group basis your answer is what? 1050. Are you able to understand? And one is known as overall basis. Overall means total basis. So if you find out total total basis. What is the answer? 395 plus 700, that is 1095, and 350 plus 740, it is 1090. So you can see if you compare these two, your answer is what? 1090. 1090. Got this point? Means if suppose I say item by item basis, item by item basis, your answer is what? 1030. If I say group or category, we also call it category basis, what is the answer? 1050. And point number C, total, or we call it overall basis, what is the answer? It is 1090. So you can see you are getting different answer on different basis. So as per AS2, for this we will give first preference. But if you can't apply item by item basis, are you getting? If you can't apply item by item basis, then you can also apply group basis, second preference. But this is not acceptable. Overall basis is not acceptable. Correct? So group basis can be applied if items on that group are of similar nature, having similar price, then we can also go for group basis. Means if these ABC are similar as well as what? Similar on prices, then we can also apply group basis, but we can't apply overall basis. Are you able to understand? So item by item basis first preference, second preference group basis, total basis or overall basis can't be applied. However, whenever question is silent, always apply item by item basis. And normally in exam question will be silent, then always apply item by item basis. Till now they have not asked any question on group basis, but if they are asked, you should be able to understand what is group basis. Have you understood group basis also? Yes sir. Because if items are similar with similar price, then we can apply group basis. Understood? Otherwise apply item by item basis. Chalega? Yes sir. Okay sir. Yes sir. What they have given? The comparison should be made on item by item basis. In some cases it may be appropriate to group similar or related item. Similar or related item having similar prices. We have only one question that you can do very easy. It is item by item basis. You can do it by your own. The next point is our review on NRB at each balance sheet date. Of course, can I say NRB should be reviewed? Let me take one example. Review of NRB. Write down point number. Which point we are doing here? It is actually 10. We have written 10. Here write down. It is 9. Okay. 10. So review of NRB at each balance sheet date. Let us take one example. Suppose you purchase one inventory at 1/4/2001 and the cost price is 100. You will do measurement, evaluation on each reporting date. So on 31st March 2002, the inventory remained unsold and the cost price remained 100. But NRB, let's say NRB become 90. NRB become 90. Quite possible. Now don't ask me why NRB become 90. Okay. Now if NRB become 90, then value is equal to 10. then how much is written down? So written down is what? Sorry. Value is equal to 90. So how much written down? 10. And this will be charged to PL as an expense. This will be charged to PL as an expense. Okay, sir. Chalega? Yes, sir. Now, suppose on 31st March 2003, again it is unsold. So again valuation. So now what our AS2 says that we need to remeasure NRV because NRV is an estimation. An estimation may change due to change in circumstances. Your cost price remains same, but NRV, let's say it become what? 85. So your value is equal to what? Now your value is 85. So again, how much you write down? You write down is not 15. Out of 15, the previous year already you have written down how much? 10. So now 90 become 85. So you write down is 5 and that will be also charged to PL account. That will be also charged to PL account. So every year you need to review what? Every year you need to review what? Your NRV. It is quite possible. It is quite possible. Suppose on 31st March 2004, again it remain unsold and the cost price is 100 and suppose NRV, let's say NRV become 105, quite possible. Now just try to demand increases and now we think that inventory can be sold at higher prices, quite possible. Correct now? It is quite possible if the market condition changes and now the demand increases. So now we are of the opinion that it can be sold at higher price, higher than cost price. So NRB become 105. So now the value will be 100. It means, can you say whatever we have, whatever was the write down in previous year, that is going to be reversed. So this is known as reversal of previous write down. Reversal of previous write down. And maximum reversal will be equal to what? Previous write down only. It will be equal to 50. We cannot reverse more than previous write down. So this was also write down 5 plus 10. So maximum reversal will be equal to 50 because if you reverse more than that, it will be against conservatism principle. Then so it means you are valuing at 105 and therefore our formula is what? Cost price or NRB, whichever is lower. So this is known as reversal of previous write down. Reversal of previous write down will be also transferred to PL account. Okay, sir. Have you understood this point? Batao. Have you understood this point? चलेगा? Any doubt about this? Now, one doubt will come, sir, how to present this write down in our profit and loss account? Only for your understanding. This is presentation. In SOPR. Means AS2 is actually silent regarding this. So this I am just explaining for your understanding. Let's say opening stock, example item. Opening stock is 1 lakh. Purchase is equal to 9 lakh. Sales is equal to 12 lakh. And closing stock cost price is equal to 2 lakh. And NRB is equal to 1,90,000. So what is the value? Value is equal to 1,90,000. Okay. So in your traditional method, in trading account, how you used to write down? Only for your understanding I'm writing. Trading account. To opening stock how much? 1 lakh. To purchase how much? 9 lakh. Buy sales how much? 12 lakh. And buy closing stock. We write on lower. And lower is what? 1,90,000. So your GP, gross profit, will be equal to how much? It is 12 lakh plus 1,90,000 minus 10 lakh. So it is 3,90,000. Understood? Have you understood? But if you just try to understand the actual happening, what was the sale? Sale is 12 lakh. And what was the cost of goods sold? Here is the cost of goods sold was 1 lakh plus 9 lakh and minus 2 lakh. Na? It means 8 lakh. It means you have sold the goods whose cost price was 8 lakh at 12 lakh, means you have earned 4 lakh on sale. Means this is the profit on sale. And what is the loss due to write down of inventory? That is 10,000. You ultimately profit is what? 3,90,000. This is the actual happening. So can you say, just try to understand, if you present in this way, we are not able to provide the correct information to the user of financial statement. Means it just try to understand, if I just present this in vertical format, how I will present. So I will say statement, just write down case 1, just write down SOPL. So now how we present this in SOPL format? How we present in SOPL format? We write down first revenue. Revenue means sales. That is how much? 12 lakh. This become your total income. Then we write down purchase. Purchase. What is the purchase during the year? That is 9 lakh. And then we write down changes in inventory. Changes in inventory. So 1 lakh was the opening stock and 1,90,000 is the closing stock. So this will be 90,000 negative. This will be 90,000 negative. Understood? So increase in stock, increasing closing stock will decrease your expense. Means ultimately this is what? 9 lakh minus 90,000 is 8 lakh 10,000. And ultimately your profit will be how much? Same profit is coming 3 lakh 90,000. So nowadays we do presentation in such a way. So normally case 1 write down, if loss due to write down of inventory is not material, then we do this type of presentation. Means we write down directly here 1,90,000. But just try to understand if the loss due to write down is material. Such information should be given to the user of financial statement or not. Are you getting what I am saying? Just try to understand. Suppose it is material, then that information should be given to the user of financial statement so that they can make rational decision. So our presentation will change. So case number 2, if loss due to write down of inventory is material. Now, such loss is actually known as exceptional item. And this will discuss in AS5 coming soon. Now, what AS5 says that if there are some exceptional item that should be disclosed separately. The same example I will take in AS5. I am just trying to link with what? AS2. Okay, sir. So, exceptional item are those items which require separate disclosure. If this is not material, immaterial, then separate disclosure was not required. Okay, this presentation was okay. But if it is material, then how to disclose it? Just write down. We write down revenue. Revenue is equal to what? 12 lakh. Total is 12 lakh. Then we write down purchase. Purchase is what? 9 lakh. Then in this case, changes of inventory. Changes in inventory will be 1 lakh minus 2 lakh only. Means this will be at cost price here. And you can see this will be 1 lakh negative. Are you able to why it is negative? Because opening stock plus purchase minus closing stock will do. If the closing stock is more than what opening stock, your expense, your cost decreases. Your cost decreases. Correct? Okay. So this will be total 8 lakh. Means actually your profit is how much? We write down profit. This will be, we will say profit before exceptional item coming soon. This everything we'll discuss in accounting standard. I am just giving you one way of presentation why we are using accounting standard. Because once you know AS, you know how to prepare and present financial statement. We as a chartered accountant are not here for only journal entry. We are not here for ledger account. We are not here only for preparing balance sheet. We are here to understand how to present balance sheet and SOPs so that user will get reliable information to make their decision. Okay. So this is what 4 lakh. And then we'll say less loss due to write down of inventory, that is 10,000, and ultimately your profit for the year will be 3,90,000. You only say if the loss due to write down was material, which is better presentation? First one, second one. Of course, second one is better presentation. So we are here to understand presentation also. So AS deals with recognition, measurement, presentation also. But this information, this presentation has been given in AS5, not AS2. So AS2 is actually silent about presentation. Are you able to understand what I am saying? So right now I have just informed you about presentation so that you can understand the importance of accounting standard in our life. We need to understand the importance of AS, importance of accounting standard. One thing, I just want to say right now, when I say accountant, when I say accountant, and you are chartered accountant, so there is a lot of difference between accountant and chartered accountant. So as a student, if you are doing only BCom, so it means you will become accountant. So accountant should know what? Accountant should know what? How to record, how to post, then how to prepare balance sheet and PL account. Only this much. Means they know only accounting. They don't know about preparation and presentation. So CA, what they will do? CA will present presentation. So CA are expert in presentation. Are you getting? So once accountant will provide their service, then chartered accountant will come. We are not here to learn. Of course, we should know journal entries. We should know ledger. But our job is not to do journal entries. We are not accountant. We are chartered accountant. So for that, we should know accounting standard. For that, we should know what is the recognition criteria, measurement criteria, presentation criteria, disclosure criteria through accounting standard. Okay, sir. Have you understood this point? I think you will appreciate this. If I will not inform this, then you will say, what is the use of this? So in traditional accounting, we used to do in this way. In CA Foundation, your teacher might have said this much, but now we are here to understand how to present. So if this loss is immaterial, then okay, chalega. But if the loss is material, then this loss become an exceptional item and we need to apply AS5. AS5 says exceptional item need to be disclosed separately. AS5 says exceptional item need to be disclosed separately. Okay, sir. Understood. To this point you have understood. An assessment is made of NRB as at each balance sheet date. The last point, there are two last points. One is disclosure, one is scope. Actually, scope is the first point, but initially, if I would have done scope, you would have not understood. So, what AS2 has done, AS2 has excluded some inventory from the scope of AS2. Means their valuation and measurement is not as per AS2. They are inventory, but for valuation measurement, we need to refer other accounting standard. So, following are excluded from the scope of AS2. Important for multiple choice question. Important for multiple choice question. Okay. So what are excluded from the scope of AS2? First is WIP, work in progress. You have understood. Work in progress arising under construction contract. Under construction contract. Construction contract means suppose you are doing construction of building and the building is incomplete. So that is WIP. That is scoped out from AS2 because for that we have AS7. For that we have AS7. But any building which is held for sale in the ordinary course of business, that is covered under AS2. That is covered under AS2. Are you getting what I am saying? So any WIP arising under construction contract will be covered under AS7. But just write down. Any constructed asset held for sale in OCB. OCB means ordinary course of business. AS2 will be applicable. AS2 will be applicable. It is not yet complete. AS7. AS2 is not applicable for that. And in WIP arising in the ordinary course of business of services. We suppose right now we are providing services and batch started. Batch is not completed. So this is what? WIP under the course of providing what services. So this is not covered under AS2. However, for this we do not have any accounting standard. So for that there is no accounting standard. There is no accounting standard. So WIP arising in the ordinary course of providing services, there is no accounting standard. AS2 is not applicable. Then any shares, any debentures, any other financial instrument held as stock in trade. It is quite possible we are doing trading of equity shares of other company. Means we buy and sell equity shares. So that will meet the definition of inventory. because in that case, equity shares are held for sale in ordinary course of business. Even though it meet the definition of inventory, it is outside the scope of AS2 because for that we apply the measurement given under AS13. So for that we apply accounting standard 13. AS13. Okay. So any shares, any debentures, any financial instrument held as stock in trade is outside the scope of AS2. We'll apply AS13. We'll discuss under AS13. Okay, sir. Then producer of inventories of livestock. Producer inventories of livestock. Livestock means what? Livestock means living animal. Living animal. Stock of living animal. Agriculture and forest product. Any agricultural and forest product means if you are doing agriculture, so any agriculture produce, any forest produce, correct? And mineral oil, ores and gases means any natural resources. So if you are the producer of inventories of livestock or agriculture and forest product and mineral oil, ores or natural gases, whatever, that is not covered under AS2 to the extent they are measured at NRV. To the extent that they are measured NRV means for this last point. Livestock, agricultural and forest product or natural resources. We are discussing about producer of inventories of. So any producer of inventories of livestock, agriculture, forest product or any natural resources. AS2 has given option. Well, either you can measure at cost price or NRV, whichever is lower. Correct? Then to apply AS2. Then apply AS2. But second option what they have given, you can also measure at NRV. You can also measure NRV, means there is no need to determine cost price. Just try to understand for this livestock, agriculture and forest product, any natural resources, can I say determination of cost price is difficult. And if I say apply AS2, then they will die. How to find out the cost price? For example, you have cow and cow has given birth to calf. So what is the cost price of that calf? It is practically impossible to determine the cost price of calf, newly baby calf. Are you getting what I am saying? In that case, one option, one relaxation has been given. If you want to apply AS2, then measure at cost price or NRV which is lower. But if you do not want to apply AS2, then an exception has been given that you can measure at NRV. In that case, this measurement criteria will be applicable and this will not be applicable. Now, if you read, you will be able to understand. Producer inventories of livestock, agriculture of forest product, and any natural resources to the extent they are measured at NRV. So if they are measured at NRV, then AS2 is not applicable for measurement purpose. Okay, sir. These are excluded from the scope of AS2. Important for MCQ type of questions. Okay, sir. The last point is disclosure. Normally, disclosures are not important from examination point of view because they will not say write something about AS2 for disclosure. But there are some disclosure which are very, very important. Any disclosure which are very, very important, I'll give a star mark in that. If I'm not giving star mark, that disclosure is not important from examination point of view. Got this point? So disclosure, the accounting policy adopted in measuring inventories. What are the accounting policies? Of course, cost price or NRV, whichever is lower. This is the accounting policies. Cost formula used, which cost formula you have used, whether you have used FIFO or weighted average price method or specific identification method or adjusted selling price method or standard costing method, whatever you have used, that you need to mention. The total carrying amount of inventory together with the classification appropriate to the entity. We should also disclose the carrying amount. Carrying amount means at what amount it will be carried in the balance sheet. That is cost price or NRV which is lower. The total carrying amount classification wise, and the common classification inventories are raw material, WIP, finished goods, stock in trade, store and spares, and loose tools. So what is this? I think you have understood raw material, WIP, finished goods, stock in trade. But what is store and spares and loose tools? That I will explain. I don't refer accounting standard 10. Our next accounting standard is AS10 only. In that we'll discuss about store and spares and loose tools. Right now, just keep this point in your pocket. I will only come back to this point soon. Nothing to worry. With this, we have completed AS2. You can see AS2 is completed. Okay, this was a very small accounting standard, but I have taken time because this was the first accounting standard. Okay, sir. Let me take some more question. I think there are two questions which I am supposed to take. Balance question you can do by your own. All balance question you can do by your own. Okay, sir. Come to question number. 1 minute. Come to question number 16. A Limited is engaged in the manufacture of chemical Y, for which raw material X is required. X is the raw material, Y is the finished goods. The company provide you with the following information for the year ended 31st March 2020. Raw material X, cost price, freight inward, replacement cost. It means one thing is clear that cost price is 440, replacement cost is 320. Chemical Y material consumed 440, direct labor, variable overhead. It become what? 440 plus 120 plus 80. This becomes 640. Total fixed overhead for the year was 4 lakh on normal capacity of 25,000. And you can see they have not given actual capacity. It means we'll assume actual capacity and normal capacity will be same. It means 4 lakh divided by 25,000 will add 16. It will become 656. 656. Closing balance of raw material is 1000, chemical Y, finished good 2400. You are required to calculate the total value of closing stock of raw material X and chemical Y according to AS2 when the NRV of chemical Y is 600. You can see NRV is less than what? Finished goods. Correct now. So just write down how to write down. We are doing question number 16. So question number 16. Since NRV of chemical Y is less than its cost price. Correct. Therefore, chemical Y, finished goods, that is chemical Y, will be valued at lower of cost price and NRV. That is rupees how much? Lower. Can you give me lower? Lower is what? 600 per unit. That is rupees 600. And raw material, that is chemical. Raw material is what? X. This X valued at lower of cost price and its replacement cost. So cost price is what? 440, 320 is the replacement cost. So that is 320. Correct? Understood? Value of total inventory. Chemical Y. How many units? 2400 into 600. It is 2400. Okay. Into 600. How much? So 2400 into 600 is equal to 14 lakh 40,000. And raw material 1000 units into 320, that is 3 lakh 20,000. Total, that is 17 lakh 60,000. Just give working note for the cost price of finished goods and cost price of raw material. That you can do. This is the answer. Check karo 17 lakh 60,000. Very simple. Okay. This 17 you can do. My help is not required. One good question I will take. It is recently given. This is super question. Means in this question, what they have done, they have combined the concept of joint cost and raw material valuation. Very good question. I like this question personally. That is MRQ. Must revise question. And also super expected. Super expected. The following information is available for Jing Limited for the year 24-25 raw material. Closing stock 700, cost price 35, replacement cost 20. Finished product FP1, FP2. Means there are two joint product. Production, closing stock, material consumed, direct labor, direct expense. Fixed overhead for the year is 95,000, which include godown rent of 15,000. Godown is used for storing finished goods. Now, godown is used for storing finished goods. Included, excluded? Excluded, because that is not necessary for production purpose. Storage cost not necessary for production purpose. Excluded. So 15,000 will be excluded. Beside two main products, 1,000 units of byproduct also emerged in the production process, which was sold at 12 per unit after incurring an expense of 2,500. 4,800 was realized from the sale of scrap. The average market price of FP1 and FP2 is 160 and 100. Calculate the value of closing stock of Jain as per AS2. Oh, very good. So first we will do what? To find out the cost price of FP1 FP2. Okay, that only we need to find out. Or we can do valuation of what? FP1 and FP2. For that we need to apply the concept of joint cost allocation. Yes, sir. Right on. We are doing question number it is what? 20. Question number 20. Right on. First, what we should do? We should do valuation of closing stock of FP1 and FP2. Okay, sir. In this first, we'll calculate joint cost. Calculation of joint cost. What are given? Check karo. They have given material consumed. Three lakh 20,000. Then direct labor. How much? 1 lakh 60. Then variable overhead How much given? Means direct expense they have given 78,000. Better write on direct expense. Direct expense 78,000. Then where fixed overhead is there? Fixed overhead. How much they have given? 95,000 minus 15,000. And you can see the question is silent about actual and what? Normal capacity. Therefore, entire fixed overhead will be allocated. 95 minus 15, how much? 95 minus 15. That is 80,000 will be added. What is the total? 3,20,000 plus 1,60,000 plus 78,000 plus 80,000, that is 6,38,000. From this, what will deduct? Less NRB of byproduct. NRB of byproduct. Now, how many units of byproduct produce 1,000 and can be sold at 12? So 1,000 into 12. And what is the selling expense to make such sale? It is what? 2,500. So minus 2,500 will do. So it is 12,000 minus 2,500. That is 9,500 is the NRB. Similarly, from this we'll also deduct realizable value of scrap. That is also given. The 4,800 was realized from the sale of scrap. So 4,800. 4,800. RV means realizable value. Or realizable value. What is the joint cost? The joint cost will be 6,38,000 minus 9,500 minus 4,800, that is equal to 6,23,700. 6,23,700. Okay. You can see they have also calculated 6,23,700. Super easy. Now we'll find out the allocation basis of allocation or ratio of allocation, right? Of point number B. Basis of allocation. We have FP1 and FP2. So how much output produce? That is given. How much output produce? You can see they have given production unit 3,000 and 1,600. 3,000 and 1,600. Multiplied by sale price per unit. So it can be sold at what price? It is given 160 and 100. So 160 and 100. What is the sales value? Sales value. So 3,000 into 160 is equal to is 4,80,000 and 1,60,000. Correct now? Correct. So it means what is the basis of allocation? The basis of allocation, or you can say ratio of allocation, will be 3:1. What is the allocated joint cost? Allocated joint cost. It is 6,23,700. We will do 6,23,700 into 3 by 4 and 6,23,700 into 1 by 4. Correct. So 6,23,700 into 3 divided by 4. It is coming 4,67,775 minus, you can do 6,23,700. It will come 1,55,925. Understood. Now, if you divide this allocated joint cost, means if you say this is A, this is B, you'll get cost price per unit. So cost price per unit will be how much? So divide by 1600, it will come 97.45 and is 467775 divided by 3000. It will come 155.93. Understood. This is the cost price per unit. Chalega. Let us check whether we are doing correct or not. So 155.93 and 97.45 exactly same. This question also I am also doing for the first time. Chalega. Understood. Then we'll do point number C. Valuation of closing stock of finished goods. Read on FP1 and FP2. FP1 and FP2. What is the cost price per unit? That is 155.93 and 97.45. And what is the NRV? NRV will be what? Estimate sale price. That already we know. That is how much? 160 and 100. 160 and 100. So NRV is more than cost price. Then valuation will be done at 155.93 and 97.45. Understood. So this is the valuation. Already valuation of closing stock of finished goods. Understood. Right, on point number B. Valuation of closing stock of raw material. So one thing is clear that NRV of finished product is more than cost price. In the given case, NRV of both finished product is more than what? Cost price. Therefore, raw material will be valued at its cost price, that is rupees how much? The cost price is given how much? Check karo. The cost price is 35 per unit. 35 rupees per unit. Okay, sir. That is rupees 35 per unit. Now we'll do point number C. Now we'll find a valuation of total inventory. Let us value of total inventory. First raw material. What is the quantity? What is the closing stock? That is 700. So 700 into 35 will do. So 700 into 35. That is 24,500. And finished product. We have FP1 and FP2. So for FP1 and FP2, what is the closing stock? That is also given. It is 500 and 300. 500 and 300. That is also given. Everything is given. 500 and 300 multiply by value. Value is what? 155.93. 155.93 and 97.45. 97.45. So 500 into 155.93 is equal to what? That is 77,965. And 300 into 97.45, that is equal to 29235. Total is what? That is 1,31,700. This is the total. Done. Got this point? This type of questions are very, very important from examination point of view. Okay, sir. You can see the answer. It is 1,31,700. Exactly same. Okay, sir. Done. With this, we completed AS2. AS2 is completed from my point of view. Achha, we can also discuss what MCQs. So I have already said MCQs. MCQs, madam. One MCQs I have given chapter wise. That is given in question bank only. Included in question bank. And second is what? Case scenario basis. For that, you will get one PDF. Correct? That can be practiced only after completion of entire syllabus. Can be practiced only after completion of entire syllabus. Right now, don't think about case scenario PDF. Right now, think about only what? Chapter wise MCQs. Okay, sir. Let us discuss that also, or you can do by your own. But we'll discuss all the MCQs. Come to MCQs at the top of the chapter. Which item inventory is under the scope of AS2? WIP arising under construction cost? No. Raw material? Yes. Yes, no. Debenture held as stock in trade? No. So option number B. Option number B is correct. Okay, sir. Material and other supplies held as used in the production of inventories are not written down below cost if the finished product in which they will be incorporated are expected to be sold. Means this is nothing but raw material. So raw material will not be written down to its cost. Means it will valued at cost price if the finished goods are expected to be sold at profit. Means more than NRV. Correct? More than cost price are expected sold at or above cost. At or above cost. Option number A is correct. At or above cost. 2 ka A. All the following costs are excluded while computing value of inventory except selling and distribution excluded, allocated fixed overhead based on normal capacity. This will be included because allocated fixed production overhead based on normal capacity will be included. Abnormal wastage excluded, storage cost which is necessary part of production process, which is necessary part of production process will be also what? Included only. Correct now? There is something wrong. All the following costs are excluded while computing the value of inventories except. So this is excluded. This is excluded. But B and D are what? Included. They have given 3B. So just change it. Which is not necessary part of production process. Then it is excluded. Storage cost which is necessary for production process, that is actually included. So just change it. Then option number B is correct. Okay, sir. So change it. Change the question. Storage cost which is necessary part of production process will be included. Which is not necessary part of production process will be what? Excluded. Okay, sir. Identify the statement which is correct, which is incorrect. Which is incorrect means which is wrong. Storage cost which is necessary part of production process is included in inventory valuation. Correct. Administrative overhead are never included in inventory valuation. This thoda doubt is there. Full amount of variable production overhead incurred are included in the inventory valuation. Correct, because full amount of variable production will be included because that is based on actual production. Administrative overhead are always included in inventory valuation. Oh, No doubt देखो, in administrative overhead are never included in inventory valuation. Administrative overhead are always, this is to not correct. Means option number D, 4 ka D. You can see 4 ka D. Why I have a doubt in B? Because administrative overhead are also included when it is directly attributable in bringing the inventory in present location. If you read the sentence, what they want to say, just read it once again. Administrative overhead that do not contribute to bringing inventory to their present location and condition will be excluded. Means if administrative overhead is contributing for bringing the inventory in present location condition, then that will be what added. And therefore, I was having some doubt for point number B. But can I say best option is option number D? Because they have given administrative overhead are always, no, it will not always included. So best option, you need to choose best option. Therefore, read A, B, C, D entirely. Sometimes whatever you think B is correct, but the better correct option might be D. Correct? So read entirely. Read entirely. The option number D will be correct option. Okay, sir. Understood. With this, AS2 is completed. We'll take a small break. After that, we'll start accounting standard 10. Okay, sir. Now, can we start once again, everyone? Okay, sir. Ready? So before break, we completed accounting standard 2. Now we'll start AS10, that is property, plant and equipment. But before we start AS10, I just want to give you one concept. This is actually related to financial management. There is one paper FM in your group 2. Okay, so that concept will be required in some of the accounting standard. The concept is time value of money. Time value of money, we call it प्यार से TVM. Time value of money. Correct? Related to which subject? Your FM paper. Write down. Just write down. Detailed discussion with FM faculty. Of course, I am not going to do detailed discussion. Means I will just give you the concept, some examples, and then we'll proceed to accounting standard. However, it is one chapter in your what? FM paper. So of course, detailed discussion will be with your FM faculty. Got this point? This time value of money will be used in accounting standard 10. Then we'll take AS 15. In that also we'll discuss about time value of money. And then AS 19. So these are some accounting standard where this concept will be used. And therefore we are discussing right now. Now, before I start this concept, I just want to ask one question. That if I give you 100 rupees right now means suppose this is today. And normally in FM we call it, this is Y0. Y0 means beginning of first year. And this is Y1 means it is year end 1. So whenever I say Y0, it means the beginning of year 1. Y1 means what? At the end of year 1. Y2 means what? At the end of year 2. In FM terminology. So today, if I give you 100 rupees right now, correct? Are you able to understand? If I give you today 100 rupees, or instead of giving today 100 rupees, I will say take 100 rupees after 1 year. Are you getting? Either take rupees 100 now, or take rupees 100 after 1 year. Means at this point 100 rupees at Y1. Batao, whether they are same or different. I think you are able to understand. Because it says we are also chartered accountants, sir. We'll take 100 rupees right now only. Because you know that whatever 100 rupees right now, if you get right now, you can invest it somewhere, and suppose if the 10% is the market rate of interest, then this 100, in 100 you can generate 10 rupees income, interest income. So can I say after 1 year the value will become 100 plus 10, that is 110. It means, can I say, either you will demand 100 rupees right now, or you will say, sir, okay, if you don't want to give me right now 100 rupees, give me 110 after 1 year, because the value of 100 will change from 100 to 110 after 1 year. Got this? This is known as time value of money. Means 100 rupees right now, today, will become 110 at year end 1. At year end 1. Because the value of money will change. Value of money will change. It is as simple as correct now. If suppose you want to purchase land today at rupees 1 lakh, after 25 years, the value of that same land will not be 1 lakh, it will be more than what 1 lakh, because the value of money will change. Value of money will change. Got this point? This is known as time value of money. This is known as time value of money. Okay. It means, can I say in this way? Can I say in this way? This is present value. This is present value. We call it was प्यार से PV. And this is future value of money. This is future value of money. That is FV. Are you getting what I am saying? Correct. It is as simple as, if you are doing right now your accounting, so you will do accounting with 100 or 110, 110 or 100, 100, because the present value is 100. Present value is 100. Means, can I say, if the present value is known, you can find out future value. And if the future value is known, you can find out present value. Now let us come to mathematics. In your mathematics, I think in CA Foundation you have done one chapter annuity. You have done one chapter annuity. Or if you have not done, leave it, I will explain. There one formula you have done. That amount is equal to principal into 1 plus r to the power n. This formula you have done. This amount is nothing but future value. And this P is nothing but present value. 1 plus r to the power n. Means, can I say, if you know present value, you can convert present value into what? Future value by applying this formula. You will do 100. 1 plus r. R means 10%. 10% means 0.10. So you will say 0.10. And for 1 year, if I apply this, can you see this will become 110 only? You can see you have converted your present value into future value. Present value into future value. So it means we can easily convert present value into future value. Similarly, if you know future value, you can convert future value into present value. Let us say how. The same formula. If I am saying A is equal to, or the formula whatever we have done, future value is equal to present value 1 plus r to the power n, we'll say present value is equal to future value into 1 by 1 plus r to the power n. Can I convert this formula into this formula? It is as simple as, let us derive it. You might be saying, sir, what you have written? Means I can write in this way. The FB divided by 1 plus r to the power n is equal to present value. Let us write down this way. Present value is equal to future value multiplied by 1 plus r to the power n. Yes, sir. We can write down this way. Means, if the future value is known, what is future value? 110 into 1 plus 0.10 to the power 1. Just calculate it, you will get 100. Just do it. So if I say 1 divided by 1.10 into 100 is equal to what? Are you getting what I am saying? 110 into, it is coming 99.99, means approximately 100 rupees. Approximately 100 rupees. Means we can easily convert future value into present value. This is the formula. But right now we'll discuss this much. Means, can I say what is the formula? Formula is what? Formula is what? The present value is equal to future value multiplied by 1 plus r to the power n. 1 plus r to the power n. And this is known as, in FM we call it present value factor. We call it present value factor. What we'll call it? Present value factor, PV factor. PV factor. Understood? Means, can I say in this way? The present value is equal to future value multiplied by PV factor, correct? Are you getting? For the rate of interest given for number of years, means R is equal to rate of interest and N is equal to number of years. This is the PV factor. You will be able to understand. Don't write down this. Let me take one example. Example number 1. Are you getting? Let me take one example. Mr. X has invested rupees 1 lakh on 1/4/2025. How much he will get after 5 years if market rate of interest is equal to 12%. Means this is present value and we want future value. What is the formula? Solution, correct. We will say future value is equal to present value 1 plus R to the power n. This is 1 lakh. 1 plus 12%. We write down 0.12 for 5 years. You can solve it. Correct now. Solve it. Are you getting what I am saying? Solve it. How much you are getting? Here you will do 1 lakh into 1.7623. Let us take 4 decimals. 7623. It will be 1 lakh into 1.7623 is equal to what? 1,76,230. So this become future value. Understood? Correct? Any doubt? It means we have converted present value into future value. Now let me change the example. Let on example number 2. Mr. X will get rupees 1,76,230 after 5 years. How much he will receive today if the market rate of interest is equal to 12%. Same thing. Means now I have given future value. Means if this is the case, this is y0, y1, y2, y3, y4, y5. This is 1,76,230. And right now, how much you receive that we want. It means we need to convert future value into what? Present value. The same formula. Formula for this, what will do? Present value is equal to future value into 1 by 1 plus R to the power n. The future value is 1,76,230 into 1 plus 0.12 to the power 5 How much you are getting? Check karo. बताओ. It means we are getting 1,76,230 multiplied by 0.5674, approximately 4 decimal. Then multiply 1,76,230. You can see it is coming approximately 1 lakh. Some rounding of difference coming because of approximation. Correct? Is coming 1 lakh. Means now we have converted future value into what? Present value. Same question. So you are able to understand. Got this fine? Are you able to understand? And you can see future value is equal to 1,76,230 and present value is equal to 1 lakh. The difference between future value and present value is interest. We call it interest. So how much interest? 76,230. And this interest is for how many year? 5 year. This is for how many year? 5 year. Are you able to understand? Are you getting whatever I am saying? Chalega. This is nothing but FM. I am just teaching you, if future value is known, can you convert into what? Present value. Can we convert it into present value? That I am explaining. Have you understood? So this is interest for how many year? 5 year. Or can I say in this way? Just try to understand. If 1 lakh was for year 1, so 1 lakh into 12%, it is 12,000. So what is the closing balance? 1,12,000. Then for year 2, the opening balance become 1,12,000. Now once again 12%, it is 13,440. Then it become 1,25,440. Then year 3, 1,25,440 into 12%, it is 15,059. It is 1,40,000. 4. One second. It is 053. Sorry, 15053. It is 140,493. Then Y4, it is 140,493 into 12%. It is 16,859. It is 1,57,350. A minute. 352. Correct. Last. It is 1,57,352 into 12%. It will be 18,882. And if you do, it will be approximately 1,76,234. And what was the answer? 1,77,230. Approximation. Understood? Approximately the same amount. So what we have done? This total amount of interest was for 5 years. So when we add, when 1 lakh is converted into 1,76,234, we call it compounding of interest. We call it compounding of interest. Means we are adding interest. You can see in 1 lakh, we have added this much interest on a compounded basis. Compounded basis means on interest. In the second year, we are also adding interest. That is known as compounded basis. This is known as compounding of interest, and we are getting future value. Similarly, if I say in this way, कि 1,76,234, if you are converting into 1 lakh, we are discounting interest. So this is known as discounting of interest. This is known as discounting of interest. Means from future value, if we deduct interest, then we'll get present value. So this is known as discounting of interest. Discounting of interest. Got this point? Are you able to understand? Correct. So this is known as compounding of interest. This is known as discounting of interest in your FM terminology or mathematics. Correct. So this is nothing but FM terminology. So whenever I say discounting, it means we want to convert future value into what? Present value. Whenever I say compounding, it means I want to convert present value into what? Future value. Whenever I say discounting of any amount, it means converting future value into what? Present value. Are you able to understand? This you have understood? Have you understood this point? Correct. I think thoda you are understanding. Chalega. It means what we have done. This was the opening balance. Means in this table, if you see, this is the opening balance. This is the opening balance. And when we have added interest, this become closing balance. This become closing balance. Understood? Chalega. Have you understood? With one example, I have tried to inform you what is present value, what is future value. Now let me take one example. Example. Just try to understand. Okay? Are you getting? Mr. X will pay rupees 1 lakh at the end of each year for 5 years. Calculate present value Understood? If market rate of interest is 10%. Are you getting what I am saying? It means, can I say in this way? Solution sorry, this is y0, this is y1, y2, y3, y4, y5. Right now this is today. We want present value as on this date. And every year, what is the payment? 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. Means this will discount for how many years? For 1 year. Discounting for year 1, 1 year. This will be discounted for how many years? 2 years. This will be discounted for how many years? 3 years. Are you able to understand? This will be discounted for how many years? 4 years. And this will be discounted for how many years? 5 years. And if you make sum total of these, this will be present value. This will be present value of all this amount. Are you able to understand? Means if I'll pay 1 lakh at the end of first year, correct? 1 lakh at the end of second year, and so on. How much I need to pay if I want to settle the liability today? So it means I need to calculate present value of all amount. Present value of all amount. So first amount will discount it for how many year? 1 year. Second amount will discounted for 2 year, third amount 3 year, fourth amount 4th year, and fifth amount 5th year, 5 year. And the sum total will be the present value of all amount. Present value of all amount. Are you getting what I am saying? Have you understood? So what we'll do? Write down year 1, 2, 3, 4, 5. What is the payment need to be done? That is 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. Correct. And can you say if you multiply with the present value factor? Correct. This is the future value, future payment. Multiply by the present value factor. It means what is the formula? Multiply by 1 plus 10% means 1.10 to the power 1. This is 1 by 1.10 to the power 2. 1 divided by 1.10 to the power 3. 1 divided by 1.10 to the power 4. 1 divided by 1.10 to the power 5. Can I write down this way? Bolo. 1 by 1.10 to the power 1. This is a present value factor. If you multiply by this, can you say you will get present value? You will get present value. Of course, you can calculate. First, you calculate by your own. First, can you give me present value factor? Give me the present value factor. Give me the present value factor. How much it is coming? It is 0.9091, 0.8264, 0.7513, 0.6830, 0.6209. First you calculate this. Are you getting the same amount or not? Same amount you are getting or not? Have you understood this point? This is mathematics. I am not teaching accounting. This is mathematics and FM. Correct? Yes, sir. Have you got the same amount or not? Yes, sir, we are getting. Now multiply. So this will be 90910. This will be 82640. This will be 75130. This will be 68300. This is 62090. Then do sum total. This will be 90910 plus 82640 plus 75130 plus 68300 plus 62090. It is coming how much? 3,79,070. Correct. Understood. This is the present value of all 5 amount. 5 lakh payable at the this is the present value of all 5 amount. 1 lakh payable at the end of 1 year. Then 1 lakh payable at the end of second year. Like this. Understood. It means what I want to say. What is the present value of first amount? This is 90910. This is the first amount. Second amount 82640. 82640. Third amount 75130. 75130. Then fourth amount 668,300. Then last amount 62090. 62090. This is the present value of all amount. Means if you want to just think about mathematics, 90910 first amount, add interest for 1 year, you will get this amount. Add interest for 2 years, you will get this amount. Add interest for 3 years, you will get this amount. Just check. Let us check this amount. 75103. Add interest for 3 years into 10%, into 10%, into 10%, 3 times. You'll say approximately it is 1 lakh. It means we are doing same. Correct. Are you able to understand? So this is the concept of present value and future value. Present value and future value. Have you understood? Now this is known as present value factor. Present value factor. Now if I give you one shortcut to calculate present value factor by using calculator, so can you say it will save your time? It will save your time. So first what you do? First step in calculator. So our rate of interest was 10%. So it means it is 1.10. So first type 1.10 in your calculator. 1.10. If the rate of interest is 12%, then you need to type 1.12. If it is 15%, then 1.15. If it is 5%, 1.05. Understood? Correct? 1.10. Then second step, press divide. Then to divide. Then what is the third step? Third step is equal to, give equal to. You can see first equal to, you are getting 0.9091 approximated. Do rounding off. 4 decimal. Take 4 decimal or 3 decimal. 4 decimal. We'll take 4 decimal. Then second equal to, we are getting 0.8264. Then third equal to, we are getting 0.7513. Then fourth equal to, we are getting 0.6830. Then 5 equal to, fifth equal to 0.6209. And then so on. If you want for 6 years, 7 years, 8 years, you can calculate. This is present value factor. It means, can you see, it is very easy to calculate by using calculator. First write down 1.10, then divide, then equal to for number of years. 1 year, 1 time equal to, 2 year, 2 time equal to, 3 year, 3 time equal to, 4 year, 4 time equal to, 5 year, 5 time equal to, 6 year, 6 time equal to, and so on. You can easily calculate. Understood? This have you understood? This is known as present value factor in FM. This is known as present value factor in FM. Understood? And suppose if you are not getting this, suppose you are not getting in, there is some error in your calculator. It means your calculator is bakwas calculator. Throw that calculator. It means you have purchased that calculator from chore market. Are you getting what I am saying? So if you are not getting this and you are finding some error, it means your calculator is totally bakwas. Don't use that calculator for CA exam. And in CA exam, you can't use scientific calculator also. You have to use simple calculator. Okay. And you just check it. If you are getting this, it means that is what? Okay, from examination point of view. If you are not getting, change your calculator. Okay, sir. Any doubt? Have you understood this? Chalega. Okay, sir. Means what we have done, just try to understand. We have done 1 lakh into what? 0.9091. Okay, sir. Plus, this is plus 1 lakh into 0.8264. Then plus 1 lakh into 0.7513. Then plus 1 lakh into 0.6830. Then plus 1 lakh into 0.6209. Yes, sir. We have done this. Can you see, if you know mathematics, in this 1 lakh, can we make common out? If you know mathematics, we can say 1 lakh is common, and we'll do 0.9091, 0.8264, 0.7513, 0.6830, 0.6209. Of course, you know this much mathematics. And then we can find out sum of present value factor, sum of present value factor into how much it is coming? 0.9091 plus 0.8264, 0.7513, 0.6830, 0.6209. How much it is coming? Oh, I've done some mistake. Once again. 0.9091 plus 0.8264 plus 0.7513 plus 0.6830 plus 0.6209 is equal to what? We will say 3.7907. Just check now what is the answer. Into 1 lakh you will do. It will be 3,79,070. What was your answer? 3,79,070. The same answer will come, sir. This is mathematics. What you are teaching, sir? We know this much math. You will say like this, sir, we know this much. We have understood. We can take 1 lakh common out. I just want to explain. This is known as annuity factor. This is known as annuity factor. Annuity factor at the rate of 10% for 5 years. So this is the annuity factor. We call it annuity factor. So I was just explaining the difference between present value factor and annuity factor. Means annuity factor is the sum of what? Sum of present value factor for given number of year. Given number of year at the rate of interest whatever is given. Are you getting? So that is sum of present value factor. Sometimes they will give you annuity factor. You need to understand annuity factor, the sum of all present value factor. Understood this? This much I just want to explain. Before I go, I proceed for accounting standard 10. Have you understood this much or not? This is a concept of present value and future value. Present value and future value. Understood? Have you understood this much? Are you getting what I am saying? Means now if any future amount is given, we can easily convert it into present value. If you know the market rate of interest and if you know the number of year, and so you can easily convert. The future value will be required to be converted in present value in accounting. When I need to discuss with accounting standard 10, and this entire concept will be used in some accounting standard. Already I have said this will be used in what? AS 10, AS 15, AS 19, and this one more AS 28. In this all accounting standard will use this. So why you have taught this? This is the FM part. Just try to understand. Right now it is quite possible FM is group 2. You have not done with group 2, and that may be after some months. Right now I need to teach accounting standard 10. So you should have the knowledge of AFM. If you would have done if you would have done FM before about advanced accounting, I would have no reason to explain this, because you would have become expert in what time value money. You will get expert knowledge with FM faculty, because a lot of questions will be done. You will become expert in this. But right now I think conceptual knowledge you have got, conceptual understanding you have got. Now we can start accounting standard 10. Are you ready for AS 10? It means just try to understand. I am also discussing that part which is relevant for advanced accounting. Even though you know, even though you don't know, that is not a matter for me. You know, very good. If you don't know, that also very good. I will explain. Okay, sir. Yes, sir. Now we are ready to start accounting standard 10. AS 10, property, plant and equipment. property, plant and equipment. First we need to understand what do you mean by property, what do you mean by plant, what do you mean by equipment. Before that, just try to understand. When I say tangible asset, tangible assets, correct? Are you getting? Or better write down assets. When I say assets, asset can be tangible assets or it can be intangible asset. Now, intangible assets are covered under AS 26. So for the intangible asset, we have a separate accounting standard. But when we say tangible asset can be inventory. And inventory is covered under AS2. AS2. And inventory is current asset. Correct now? No, just try to understand. Can we say property, plant, and equipment are all tangible assets? No, we can't say all tangible assets are not property, plant, and equipment. And therefore, there are many tangible assets which are property, plant, and equipment. And this property, plant, and equipment are covered under AS10. Are covered under AS10. Got this point? There is one more. We call it investment property. Investment property. Investment property is covered under AS13. Investment property is covered under AS13. So we can't say all tangible assets are property, plant, and equipment. Correct? Means property, plant, and equipment are that tangible asset which meets certain conditions. So we have done AS2. Now we are discussing about PP. But before we start PP, we need to understand what is the meaning of property, what is the meaning of plant, what is the meaning of equipment. So when I say property, property means what? Property means land, or it means building, or part of building, or part of building, or it means land and building. This is the property in accounting. Means when I say property, you might be thinking about gold, etc. No, that is property as a layman language. But here property means land or building or part of building or land and building. This is only property. Property you understood. Now what do you mean by plant? Plant means what? Plant means any tangible asset which are used for production purpose. Means which bear any produce. Correct? That is plant. Means which is used to generate products, generate some production. That is known as plant. So it means which are used to produce any item, that is known as plant. Are you getting what I am saying? Means all machineries are not plant. For example, this calculator is also machine. This calculator is also machine, but that is not plant because this calculator is not used to produce some item. So any item, any tangible item which are used in production activity, that is plant. Equipment means what? All other item other than property and plant, that is equipment. For example, furniture, fixture, anything, laptop, mobile, whatever you can see, that is equipment. But of course other than inventory, because inventory we are not discussing in this. Other than inventory. So you have understood property, plant and equipment, and now we will not use the term fixed asset. Means we will not call it fixed asset. Fixed asset has been deleted from our life. So now there is no term known as fixed asset. That was a wrong term given. So now that term has been deleted and therefore I'm not writing anywhere. Correct now. So now the term fixed asset has been deleted from our life. Has been deleted from our life. So now we'll not use it and therefore I'm not writing anywhere fixed asset. Okay, sir. Yes, sir. Chalega. Now we can start AS10. So let us understand first what is the meaning of PP. So now when I say PP, PP is what? What? A wider term, property, plant and equipment. So I am not defining property. I am not defining plant. I am not defining equipment. I am defining property, plant and equipment together. I am defining property, plant and equipment together. The property, plant and equipment are those tangible items. One thing is clear that all tangible items are not PP. All tangible items are not PP. Inventory is a tangible item but not PP. The PP are those tangible items which satisfy two conditions. What are that two conditions? Which are held for use in production of goods or for supply of goods or services or for supply of goods or services or for rental to other or for admin purpose. Means any tangible item which are used for production of goods. Plant is an example of property, plant and equipment which are used for supply of goods and services. Any item which are used for supplying goods or services, that will be also what? Property, plant and equipment. So whatever item you are using for supplying your goods, any truck for supplying your goods, that will be what? A property, plant and equipment which are given on rental to other. Which are given on rental to other. If you have given some tangible item on rent to other, that is also what? Property, plant and equipment. Or for admin purpose, if you are using any item for administrative purpose. For example, right now I am providing services. Right now I am providing services. So I am using camera, I am using laptop, I am using PC, I am using mic, I am using many other things. Entire studio I am using for recording my classes. So these are the items which are used for providing services to you. But can I say I have one admin office also. There my all marketing people, my accounting people will sit and do all the administrative work. Correct now. So whatever asset they are using, doing for performing admin purpose, that is also what? Property, plant and equipment. Correct now. So I have an office. This is the studio. I have an office where all my employees will sit and do all the accounting work, do other activities. Correct now. Whatever is required for my business. So that asset, whatever they are using, that is also property, plant and equipment. Understood? So any item which are used for production of goods, for providing goods or services, for rental to other, for admin purpose, will be what? Property, plant equipment. If one more condition is satisfied, what is second condition which is very important, which are expected to be used for more than one period, which are expected to be used for more than one period. Now it means expectation of which time? Expectation on initial recognition. What was your expectation on initial recognition? Initial recognition means when you are acquiring it. When you have acquired it, what was your expectation? When you have acquired it, what was your expectation? Correct now. The expectation actual can be different. So what they want to say, just see what was your expectation. If your expectation was that you will use it for more than one period, it will meet a definition of PP. For example, you purchase computer and your expectation was that it will be used for more than 1 year, it will be what? Property, plant and equipment. Correct? Quite possible your expectation was 1 year, but actually you have used for 6 months, then also it will meet a definition of property, plant and equipment. Got this point? But any item which you have purchased and your expectation was that it can be used only for 6 months, 7 months, 8 months, it means it will not meet the definition of property, plant and equipment. It will not meet the definition of property, plant and equipment. Got this point? Correct? Are you able to understand? So both the conditions need to be satisfied. Both the conditions need to be satisfied. Correct? So property, plant and equipment are tangible items which are held for use in production of goods or for supply of goods and services or for rental to other or for administrative purpose and expected to be used for more than one accounting period. Correct? Definition is very simple. I hope you have understood, but some clarification required. One doubt will come, sir. You said admin purpose, but nowhere it is mentioned marketing purpose, accounting purpose. research and development purpose. For example, there are some item which you are used for research and development purpose. Whether that item will meet the definition of property, plant and equipment, yes, that will also meet the definition of PP, because AS10 has given one clarification that administrative purpose is a wider term used in this particular definition. It will include all other purpose other than sale in the ordinary course of business. Means if you are using any item for business purpose apart from sale in the ordinary course of business, that will meet the definition of what PP. The administrative purpose will include marketing purpose, accounting purpose, research and development purpose, whatever. So admin purpose has been used in definition as a wider sense, So administrative purpose has been used in a wider sense to include all business purposes. Thus, PP include asset used for selling and distribution, finance and accounting, research and development, etc. Okay, sir. Yes, sir. Meaning you understood. Then one more clarification. Just write down. Clarification. When I say property, now you have understood. Land and building. Whenever we say property, it means land or building. If this land and building are held for sale in OCB. OCB means what? Now, whenever I write down OCB, OCB means ordinary course of business. If you have not understood, write down full ordinary course of business. Then it is inventory. Then it will be inventory. Correct? And which AS will apply? AS2 will apply. Correct? It is held for earning rental income, or point number B, capital appreciation. Capital appreciation. So what is this? Normally what happens? Normally, if you are doing business, you might have some idle cash. So you may have invested in some land and building, which might not be used for your business purpose. Means you have some spare land and building. So if you have some spare land and building, what do? You may generate some rental income by giving that land and building or rent. Correct now. Or you might hold some land and building for capital appreciation. Means you have done some investment in land and building. For example, you purchase at rupees 1 lakh and after 5 it may become 5 lakh. You gain 4 lakh profit on that. So what our AS says that this is actually known as investment property. This is known as investment property, and for this AS13 will be applicable. For that AS13 will be applicable. Means any property which is held for earning rental income or for capital appreciation, that is not covered under AS10. That is covered under AS13. It means any property which are held for production of goods or services, a supply of goods or services, or for admin purpose, this will be covered under AS10. So these are known as property, plant and equipment, and AS10 will be applicable. Understood? Have you understood this point? Now one doubt will come, sir. If you have not mentioned rental to other, so why in the definition it is given rental to other? One doubt will come. Rental to other. One doubt will come now. The rental to other, it is added because of one reason. Means any property which are given rent to other for earning rental income, that is what investment property. But just wait down. If there is some plant and equipment, plant and equipment, if it is held for sale in OCB, then to it is inventory, no doubt. And AS2 will be applicable. Means if I am a dealer of plant, dealer of equipment, I am a dealer of computer. So for me, computer is inventory, not property, plant, and equipment. Okay. And if I have plant and equipment that is held for earning rental income, rental income. For example, I have a car and that is given on rent to other for earning rental income. So actually, that is my business. That is my business. I hope you are understanding. The only exception is for investment property. If you have some building which is given on rent to other for earning rental income, that is investment property. But there is no investment plant, investment equipment. If that is held for earning rental income, it will be property, plant and equipment only, and AS10 will be applicable. And it is held for production, B supply, C admin purpose, then also it is property, plant and equipment. In both cases, AS10 will be applicable. This is only for clarification. So any plant and equipment given on rent to other, AS10. Any property given on rent to other, AS13. Got this point? This clarification you have understood? Have you understood this point? And therefore in the definition it is mentioned rental to other, but one clarification has been given: investment property are covered under AS13, not under AS10. Investment property are covered under AS13, not under AS10. Correct? Understood? Are you able to understand? Now, of course, plant and equipment cannot be held for capital appreciation. Have you seen? I have invested in plant, I have invested in computer for capital appreciation. Correct now? Plant, equipment, the value will decrease. It will never increase normally. Normally, no one will invest in plant and equipment. Got this point? And therefore, plant and equipment cannot be held for capital appreciation. Only land and building can be held for what? Capital appreciation. Got this point? And therefore, that term has not been added here. Are you able to understand? Yes, sir. That also you have understood. Next point, third point, which is very important for MCQs. Treatment of spare part, standby equipment and servicing equipment. So what is spare part? What is standby equipment? What is servicing equipment? Just try to understand. Spare part means what? Spare part means what? The parts of machinery. Normally what happens, just try to understand, if you are into production, so you have big plant and that plant require maintenance, and during maintenance you might require some spare part. Means some spare part might got damaged, because of that reason they are not able to produce, and that spare part require replacement. So what we do, we purchase some stock of spare part. Correct now? We'll purchase stock of spare part in advance, and whenever required, we'll use stock of spare part for maintenance purpose. Understood? What do you mean by servicing equipment? Servicing equipment means what? Any equipment which will be used at the time of servicing that plant. It is as simple as, you might have seen there are some tools in your bikes. You have never used it because you never do servicing of your bike. But when you service your bike, the mechanic will use that tools for servicing your bike. That is nothing but servicing equipment. Correct? What is standby equipment? Standby equipment means that equipment will be used when the principal equipment cannot be used. Standby. For example, right now in my studio there is one air conditioner, AC. With that I have some ceiling fan also, but ceiling fan will be used whenever AC is not working. Means ceiling fan are standby equipment that will be used when AC can't be used. It is as simple as, in big manufacturing industry there will be some power plant to generate electricity. But that power plant might require maintenance for 15 days, etc. For 15 days, you can't use that power plant. So how you will generate electricity? Because you can't stop your production for 15 days. In that case, we will have some small generator. And that small generator will replace that power plant for 15 days. It means it will be used only when you are not using that power plant. That is known as standby equipment. Now one doubt will come, spare part. servicing equipment, standby equipment will not be used throughout the year. It is quite possible you have acquired today, but it will not be used for the entire 1 year. It will be used after 1 year. So whether it will meet the definition of PP, one doubt will come. Whether it will be PP or it will not be PP. So what our AS10 says that if it meet a definition of PP, then it is PP, apply AS10. But if it is not meeting the definition of PP, then it is not PP. It will be classified as inventory and apply AS2. And apply AS2. Are you able to follow me? Simple. What they say? Any spare part, you have understood what is spare part. Any standby equipment, you have understood what is standby equipment. Any servicing equipment, you have understood what is servicing equipment. Whenever it meets the definition of PP, it will be classified as PP and apply AS10. But if it is not meeting the definition of PP, then it will be classified as inventory, apply AS2. Correct? Sir, what you are saying, just try to understand. Let us apply the definition. So spare part, standby equipment, service equipment. Can I say it will always meet the first condition? Because of course it will be used for production or supply or for what? Admin purpose. Correct now. Basically it is used for production only. Correct? Because if you are doing repair and maintenance, so repair and maintenance is directly related to production. Are you getting what I am saying? So of course first condition will be satisfied. First condition will be satisfied. Servicing, because servicing equipment, servicing activity will be included in admin purpose, because admin purpose is a wider term. The first condition will be satisfied, but can I say the second condition might not be satisfied, because expected to be used for more than 1 year, one period might not be satisfied. There might be some small spare part or small servicing equipment which might not be used for more than 1 year. In that case, second condition is not satisfied. So in that case, what our AS10 says that it will be classified as inventory, not PP. And in that case, you need to apply AS2, not AS10. Understood? And because of that reason, when we have done AS2, you remember? When we have done AS2, this was the AS2. When I said classification, in the classification of inventory, there was store and spare and loose tools. Loose tools means servicing equipment. It means any spare part, any servicing equipment, and standby equipment which do not meet the definition of PP will be classified as inventory. Understood? But if meet the definition of PP, then you need to apply AS10. That is only given. If it meet the definition of PP, then recognize as PP and apply AS10. Then all the accounting policy of AS10 will be applied. If it does not meet the definition of PP, then recognize it as inventory and apply AS2, means it will be measured at a cost price. So NRV, normally it will be valued at cost price only. Such inventory will be charged to PL as an expense when consumed. Consumed is when used. It will be charged to PL as an expense when it is consumed. Correct? Let me explain this point. Correct? So just write down. When the purchase of spare part, purchase of spare part, just write down classified as inventory. Why it is classified as inventory? Because it does not meet the definition of PP. So what journal entry will do? Spare part inventory, account debit to bank, and it will be included in inventory in balance sheet. It will be shown as inventory in balance sheet. Okay. Then use of such spare part in repair of machinery. So you have used that spare part in the repair of machinery. So what journal entry will do? Repair expense. This repair expense will be transferred to PL. Account debit. To spare part. It means spare part, that inventory will be charged to PL account as a repair expense, that they want to say. Once you have used it, that spare part will be charged to PL as an expense. Got this point? Have you understood? If it is classified as inventory, then if it is classified as PP, then apply AS10. Then there is no need to apply AS2. Okay, sir. I hope you have understood definition. Today we will do definition only, not more than this. Believe me, today I have taken much time in discussion of time value of money. That was not my part, but I need to discuss that because that will be used in AS10. If I will not discuss that, then you will not be able to understand some concept of accounting standard 10. So believe me, we have not started AS10 right now. Only we have done the definition part. We have completed AS2, revise AS10, whatever we have done tomorrow. Okay. Come tomorrow after revision. And of course, you need to revise also what? AS2 and do all the pending question, whatever left, that also you do. If any doubt, you can ask me the doubt in the WhatsApp group, whatever has been provided to you. Okay, sir. This much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye. Love you all.